Welcome to Cushman and Wakefield's Market Outlook 2021 series. Hi Sean.
Hi Christine.
Let's start with the residential market because lately I think the sentiment has been quite buoyant.
Yep.
If we look at the transaction volume, in the third quarter of this year, we saw 7,000 units being sold both in the primary and the secondary market. That's actually the highest since the second quarter of 2018.
Right.
So how are developers responding to this buoyant segment?
I think developers, of course, are very happy. And we see that quite a number of developers has actually come to us to look for sites, especially the small to medium developer with a view to replenish land bank. Actually, we just recently sold a site at Guillemard, which we were marketing for about 18 months. And suddenly you just see people with renewed interest knocking our doors to look at some of these sites. And we're happy that we already sold that property 3 weeks ago. And there are more people coming to us looking for more sites, especially those sites that are owned by single owner. My take is probably you will see a bit more activities in the resi market with developer coming full force looking out for sites. And maybe next year we'll see more collective sale activities coming to the market as well. Probably the small to medium size site will find buyers. The mega site, they will try to attempt to look for buyer, but I think probably that will still be a bit difficult.
Yeah, I think if we look at the data, really the start of the en bloc cycle last time was in the second quarter of 2016.
Yes.
That's when the unsold inventory actually dropped to 23,300 units.
Yeah.
Right now we are at 26,600 units unsold as of third quarter of 2020. Do you think that some of the collective sales that will be pushed out next year will be sold? What about the larger sites?
Yeah. I don't think they're coming back in a big way, but next year you will see a lot of collective sale activities coming onto the market, small, medium or large site. My take is you will see some small and medium-sized developer buying up some of the smaller sites, but mega site I believe will be slightly difficult to get buyer for the reason that you have ABSD and QC issues with the 5-year restriction. But then again, you never know. Some of these developers may all want to take a look, but eventually we will see small to medium-sized project getting buyers.
Yeah, that's right. Your team also launched a few collective sales sites and also commercial sites in the CBD.
Correct.
Are they tapping into this CBD incentive?
Yes. Actually, the reason some of these owners are offering their site for collective sale, meaning some of these commercial sites, partly also because their sites are all within the CBD incentive scheme. The only thing is earlier on you see funds coming to look at some of these commercial sites, but lately you have more resi developer coming to give a run for the money of some of these funds looking at the site. Mainly very simply because short of land bank in resi. For CBD incentive scheme that some of the site has, they can potentially convert to resi usage, right? Subject to approval. Either resi with commercial and first story or commercial resi. So developers are looking at some of these sites to potentially convert them to resi components so that they can add on to their land bank. Yeah. So on that note, we think that there will be more CBD office, old office especially, office building, change hand maybe next year. With buyers usually from the various funds. Now that you have additional buyer coming from the resi developer side. Yeah.
Right. So coming back to office, just now you mentioned, if we look at the data, and this year we didn't really see a lot of big ticket item this year because of COVID. But I see the prices, also the yield, they are still holding up quite well.
Yes.
So what exactly is happening in the investor space? What's holding investors back for those big ticket items?
Right. I think as far as office is concerned, it's still the favorite asset class for a lot of funds, a lot of institutional funds as well. The only reason why you don't see a lot of transaction, big ticket transaction, not because there aren't any interested party, First, you have limited stock in the market. Good premium grade A office stock, you don't see them available in the market very frequently. The other reason is because of this COVID-19 pandemic. Although funds, investors are looking to buy office asset, they still at the back of their mind very concerned about what's going forward for office asset, especially with the situation of softening rental. Even at better interest rate, the buyer still want to add in a certain risk margin in their pursuit of returns. So meaning that, let's say if the office is giving you 2.8 to 3% entry yield, with the current interest environment maybe hovering around blended rate of 1.6 interest rate, you see that there's some margin. But unfortunately, buyers are more cautious. They want a bit more risk factor added into the required yield. So they will probably want a higher margin in terms of yield compared to last time. So there's still gap between the buyer and seller in terms of price expectation. But I noticed that the gap is narrowing, partly also because honestly you look around, there are not a lot of stocks available. And when one or two of the investors start to put in a bit slightly more aggressive bid, the rest will follow suit. Because there's only just limited number of good grade A office on the market.
I think they're also a bit less risk averse right now. With the opening of the economy and going into 2021 with perhaps the vaccine coming on stream. We are also looking at Shophouse transactions. I think we saw a lot of launches in the Shophouse transactions this year. So what's your take on these Shophouse transactions? Do you think they will eventually be sold?
Shophouse asset typically are favorite of some of the family offices, high net worth individual, Singaporean investor like to acquire shophouses, mainly because a lot of them are commercial zoned. And it's not difficult to find tenants previously. Right? The reason why suddenly you see so many shophouses coming on the market looking for buyers, I guess some of these landlords may find their tenants either bowing out due to the COVID-19 pandemic or reduced rent. So some of these owners are keen to probably divest them just to recycle capital, maybe just to wait for a next opportunity to come by. That explains why suddenly you have so many projects. I think probably more than 25. And all these shophouses are at various stages of trying to get a buyer, either a EOI or tender. So we think there could be some repricing for shophouses because the buyer or shophouse investor are swipe for choice.
Okay, so overall, what's your take on 2021? Where are the opportunities?
I think, one, we talk about residential sector, right? I think small collective sale project will probably take off next year. Small to medium-sized project, which I mentioned earlier. Two, for as far as office market is concerned, I think they'll probably see quite a fair bit of small to mid-sized older CBD office building changing hands, mainly because of CBD incentive scheme that attracts resi developer as well as opportunistic or value-add funds coming to the market. And then we talk about shophouses, right? I think on that front, I believe you will see some transaction with people picking up value buy in the shophouse sector.
Thank you, Sean, for your insightful sharing.
No problem.
So I think one key takeaway is really the residential collective sale market is probably coming back in a big way. There are also opportunities in the office market as investors continue to favor this segment despite the falling rent and also the compressed yield. Finally, I think Shophouse market presents some interesting opportunities because of the availability of the stock, as well as some of the repricing opportunities.
Yes.
So with this, thank you so much for sharing, and we look forward to hearing more from you.
Thank you, Christine.
Thank you.